In the last couple of weeks, we've heard from all of the big four banks with surging profits and what seems to be the start of a new battle for the retail customers. And we thought it would be a good time to take a little bit of a closer look at their prospects with a top banking analyst. Brian Johnson from CLSA Asia Pacific Markets joins me now. Well, Brian, how do you assess the big four banks?
Well, it's quite boring at the moment, Tiki, because I would argue that they're not really compellingly cheap, nor are they compellingly expensive. But the real danger in the banking sector is that there are earnings risks developing. And if you were to look back, going back over an extended period, you could perhaps argue that they're a little bit overstretched. But it's not compelling either way at the present time.
So if I had $10,000, which one of the four banks should I be putting my money into at the moment?
Well, I will be accused of this being quite a radical view. But one of the things after many years of looking at stocks is the market always thinks all the banks are identical, and they're not. The stock that I would suggest is Commonwealth Bank, and the reason it's kind of complicated, but just to run you through. Before the global financial crisis in 2007, it was so easy to borrow money, you made your money lending money. And there really wasn't a competitive advantage to be derived. But if you have a look at Commonwealth Bank and you kind of think about the fact that the population is ageing, they've got a very big deposit base, very big funds management operation, and also some looming competitive advantage they'll get from technology. To me, it's the standout amongst the Australian major banks.
They also have a very big and aggressive campaign offering $1,200 in cash now to customers to switch their loans from NAB. Is this genuine competition emerging within the banking sector?
Well, it is, but you've got to remember that in November we saw the banks, basically the Reserve Bank moved the interest rate by 25 basis points, and someone like Commonwealth Bank moved their rate up to be as much as 45 basis points above that. So really what we're now seeing is we're starting to see some competition at the fringes in what is really quite an increasingly competitive market.
Well, what's it going to cost the Commonwealth Bank?
Well, the significant thing to note is it's for new customers. National Australia Bank went and adjusted their prices for every customer. And so it depends on how long it takes basically all their existing customers to migrate on the new deal. But at the end of the day, I think it'll cost them a little bit of advertising, and that's probably about it, because, as I say, it's only about the new customers coming on board. And you've got the flip side is you've got that quite substantial interest rate move that they put through in November.
NAB started this, of course, offering all sorts of things to their home loan customers. How do you think that's going to go for them?
Well, I mean, the danger is that you can be looking backwards the whole time. And when I look at National Australia Bank, the fact is that the last decade hasn't been a great time to be a National Australia Bank shareholder. And when you go back and you have a look at the reasons why, there's three of them. It's acquisitions that appear to have destroyed value. It's basically a recurring operational risk failures. And the other one is that every time they seem to have a market share problem, they race out and cut their price.
Presumably it's early days, though, with the latest strategy.
Well, it's been going for some 18 months. And at this early point, all we've seen them really do is just reduce the profitability of the bank by about $300 million. Now, presumably the growth rate will accelerate. And as you say, it is early days. But thus far, what you're really doing is you're lowering the profitability of the whole sector.
Meanwhile, Moody's has downgraded all of the banks because of the amount of wholesale offshore funding they've got in the wholesale market. Will that matter much, do you think? Well,
not really, because at the moment the ratings are AA1, and they're still saying that they'll be AA, which means they could fall one or two notches and still they'll be in the AA group. And there's not a lot of AA banks in the world. So it's a negative at the kind of fringes, but it's nothing catastrophic.
Overall, how has the financial crisis left our big four?
Well, it's this fundamental thing that we had an extended cycle where for 15 years all you had to do was lend money. You never had to really worry about borrowing it. The Australian banks entered the global financial crisis with models where they basically borrowed very short and they lent very long, and they had a lot of reliance on offshore debt, and all of those dynamics now become somewhat more difficult going forward. And we're already seeing this. We're seeing credit growth in Australia slow down significantly under the burden of these increased interest rates coming through.
All right. Well, we had the G20 talks over the weekend. A transaction tax was on the table for banks. Now, Wayne Swan made it clear last night that there would be no super profits tax for banks. You see a different sort of cost for them round the corner.
Before the global financial crisis, the view was that the Australian banks were in great shape, and that is a view that's still held today. But the fact is that we saw the Reserve Bank dramatically cut interest rates. We saw the government come out and basically guarantee their funding. We saw the Reserve Bank ease up on all of the repo restrictions. Now, what really becomes apparent is that borrow short, lend long model the banks had is not without risks, but the banks were able to basically require the liquidity support of the Reserve Bank. What I'd flag, I think, is inevitable that we'll move towards a world of deposit insurance, which you mightn't call a tax, but effectively it has exactly the same result. So I'd be tipping that we'll move to a deposit insurance regime.
And briefly, does ANZ deserve the mantle of Australia's Asian bank? Because it certainly impacted their margins.
It has. But a better way to think about ANZ, I suspect, is that they're far bigger in New Zealand than they are in Asia at the present time. And certainly while Asia is a thematic that you commonly hear everyone cite about ANZ, it concerns me that perhaps the business is a little bit smaller thus far than many commentators would suggest. They are far bigger in New Zealand than they are in Asia at the present time.
All right, Brian Johnson, thank you very much for all that information. Thanks for joining us.